Good evening, guys. What's up? How are you guys doing today? Did you guys close a bunch of trades? Good evening. Today is Monday, October 10th of 2022. So let's go ahead and start a new live streaming for you. If you want me to go over some stocks, please drop a comment over there in the live chat. And in the meantime, let me tell you guys what happened today. A very volatile trading session, despite the fact that the bond market was closed and we had another red day across the board. And mind you, guys, Lael Brainerd, which happens to be the Fed vice chair, kind of saved the day for the bulls. So Lael Brainerd spoke at 1:30 p.m. right after Jamie Dimon said that he sees another 20% drop in the S&P 500. So the markets got very pessimistic uh, once Diamond's statement came out, and if it hadn't been by the vice chair of the Federal Reserve, we could have had a deeper red day in the markets. Nevertheless, we had another red day across the board. The Russell 2000 went down 0.60%. The Russell is still being some sort of question mark, guys, because today we had the Nasdaq and the Nasdaq 100 closing at a 2-year low, and the S&P 500 already took out the June low. But in the case of the Russell 2000, this index has refused systematically to take out its June low. So this is some sort of question mark that we have on the table. The Nasdaq went down 1.04%. You guys know that all. I guess that I haven't taken a deeper look at the semiconductor ETF, but I guess that every single semiconductor stock today went lower. So the SMH, the semiconductor ETF, is a very heavy holding inside the Nasdaq and the NDX. So the semiconductors were the main responsible for the red day that we saw today in the markets. So the Nasdaq went down 1.04%, the Dow Jones went down 0.32%, and the S&P 500 went down 0.75%. Crude oil, we saw some sort of profit taken when it comes to crude oil. You guys know that oil went on an absolute tear last week. So crude oil went down today 2.01%. We can also make the case that the US dollar went higher today 0.32%, and that's obviously a factor that puts downwards pressure over commodities and also precious metals. Gold went down 2%, and silver went down 3.16%. The bond market was closed today. So this closing price of the 10-year Treasury yield is the closing price from last Friday. We didn't have any activity in the bond market. If we take a look at the sectors of the markets, we had some sort of defensive day plus a cyclical day. So a very defensive sector led the way today. In the case of the sectors, consumer staples goes up 0.36%. And this sector was followed by two classical cyclical sectors. So the industrial sector went up 0.35%, and materials went up 0.22%, another very defensive sector. This would be the most defensive sector out of the bunch. Utilities went up today 0.17%, but other than these four sectors, the other sectors went down, went lower, and the three most important sectors of the markets went down today. So financials goes down 0.45%. Healthcare goes down 0.63%, and the tech sector, the most important sector by far of the markets, went down 1.68%, mainly because of the beating that the semiconductor stocks got today. And if we take a look at the advancers and decliners distribution, another very negative day with 4,000 stocks going lower and 2,500 free stocks going higher. And as you guys already know, I guess it's going to be a very important week. We have a bunch on the table. So on Wednesday we have the Fed minutes. The Fed minutes is, for the most part, some sort of document that the Fed releases, that is that has a summary of what was discussed in the previous Federal Open Market Committee. That document is going to be released at 2 p.m. Eastern Standard Time on Wednesday. So you guys can expect some volatility once this document comes out. Most of the Fed speakers that we have listened to recently have sounded very hawkish. So I would say that the tone of that document might be hawkish. Let's just put it that way. Maybe too hawkish for the bulls, but I am expecting a downwards pressure once that document happens to be released on Wednesday at 2 p.m. Eastern Standard Time. Also on Wednesday, we have the Producer Price Index. That report is going to be released. It's going to come out at 8:30 a.m. Eastern Standard Time. And obviously, guys, on Thursday, we have the inflation report of September, the CPI, which comes out at 8:30 a.m. Eastern Standard Time. Then on Friday, we have retail sales. And on Friday, the new earnings season kicks off with JP Morgan and Wells Fargo. So I just told you guys about what Jamie Dimon stated today. He says that the S&P 500 easily has another 20% drop coming up. I think that's very extreme. It's obviously a possibility. Who knows if that is going to be the case? But this is going to be a very important week for the markets. Today I closed two trades only. I closed a covered call, three covered calls that I sold of Lucid, and I also uh, uh, closed a couple of puts that I got last week of the S&P 500 of the SPY. But other than that, I don't own any puts as of now, and I am going to be, um, let's say, trading day by day. I don't want to. I am not in a situation in which I feel very comfortable holding puts overnight. So today I closed all of my short positions. I feel a bit weird because of that, but well, that's what I decided to do today. So let's see if tomorrow we happen to have turn around Tuesday. So let me show you these guys, by the way. So Diamond comes out today and he says that he sees another 20% drop in the S&P 500 and all that bad stuff for the bulls. So we started to drop, and then Lael Brainerd came to the rescue for the bulls. Take a look at what Lael Brainerd said today. The Fed should proceed deliberately to assess how the economy, employment, and inflation are adjusting in order to inform the path of policy rates. So let's say that the bulls received this comment in a positive way because it didn't sound as hawkish as most of the comments that we have heard recently from every single member of the Fed that has spoken in the most recent weeks. So, and as I just told you in the beginning of this live streaming, if it hadn't been by Lael Brainerd, I think that we could have seen an absolute bloodbath in the markets, which wasn't the case today. So let me say hello to you guys. What's up, Isaac? Bruno Godinez. Build your own empire. Apple, he says. Okay, let's go over Apple. Ocean Gonzalez, Leslie Williams, what's up? Javier Rodriguez, what's up, bro? And Leslie Williams. So Isaac says, Tesla options scare me. Would you recommend swinging Tesla shares instead, since we could possibly expect a rally soon? Oh yeah. If you can afford buying Tesla shares, instead of buying call options, that would be absolutely advisable. So let me go over Tesla. This chart is absolutely broken from a technical standpoint. Let me go over Tesla and let's go over the market structure of Tesla, my Tesla. So what is going on over here? Tesla went down today. Not much, only 0.05%, and it closed the trading session at $222.96. 224 bucks is an important spot for Tesla, guys. We are talking about a previous support back from July 13. So if Tesla, which is a bit oversold as of now, take a look at the RSI on the 4-hour chart. We can see the RSI of Tesla sitting at 28 points. It is oversold. Um, from a technical standpoint. So we might be seeing some sort of bounce back up anytime soon. But however, the fact that the RSI is a bit low, that doesn't imply that that Tesla cannot go any lower. So if the bulls fail at taking out 224 bucks, this could be a short because in that case, we have room down to almost 214 bucks, which happens to be a previous support back from mid-June. So this could be a potential short for Tesla failing at 224 bucks and then dropping down to 214 bucks. However, if the bulls can successfully take out 224 bucks, then we have room up to 231 bucks. 231 bucks is a previous support back from early June, and this is also a clear support, a clear former support back from late February. So if we happen to take a breakout trade over here from 224 bucks up to 231 bucks, this would be a 4% profit trade. And to the downside, this would be a beautiful short, guys, down to 214 bucks, 213 bucks in the case of Tesla. But as my friend Isaac was stating, very ugly looking short. We have a decline in 5-day moving average. We have a decline in 200-day moving average, 100-day moving average. We can also see over here a death cross with the 50 SMA crossing below the 180 SMA on the 4-hour chart. So this is a very ugly looking short. So if you want to play the upside, in the case of Tesla, and you can afford shares rather than buying calls, then that would be the safest way to take a trade on Tesla, unless you can buy extrinsic value. Why do I mean when I say that? I mean that if you're going to buy calls, try to purchase calls that expire in March, I don't know, May of next year or something like that. Okay, but if you guys are going to buy weekly options on Tesla, thinking about a bounce back up, you have to either apply a very tight stop loss, which in the case of Tesla is always a nightmare, or you can buy shares instead, taking advantage of the fact that Tesla is getting closer to 200 bucks. Let me go ahead and take a look at market structure of Tesla. So who is in charge over here? The sellers or the buyers? I'm afraid that the sellers are in control because Tesla closed today below VWAP. So let me see. Take a look at this shitty market structure, guys. If the bulls fail at 224 bucks, this is a short, guys. Take a look at the market structure sentiment of the stock of this company, 1 out of 10, and we have a collapse in demand that is below the supply. So obviously, guys, the sellers are in absolute and total control of the technical short of Tesla. So you have to be careful with good old Tesla. What are your thoughts for the CPI data this Friday? I am very negative, guys. Yeah, I have been, let's say, making a comparison on among my bills when I buy groceries. So I have been doing that throughout the last 2 months, and prices have been going higher, guys. So I am not very optimistic what the markets are waiting for, and this is something that I'm going to be discussing further with you guys on Thursday when I go live for you once again with Mario. So what the markets are waiting for, the most important metric is going to be the core CPI, which is being expected at 0.5%. And I think that we might see a miss. And if the core CPI, which happens to exclude from the inflation equation both energy and food, if the core CPI happens to come out hotter than or higher than 0.5%, then yeah, we might see another big dump in the market. So maybe Jamie Dimon is going to be right. Maybe we still have more room to the downside. I don't know if maybe at 20%. What would happen, guys? Let me do the math, by the way. So this guy comes out and he says, let me pull up the SPY. And he says, yeah, the S&P can easily go down another 20%. So let's see what he said. And mind you, this is not a regular guy, guys. We're talking about the CEO of the largest bank of the world. So this is a guy that obviously the markets are listening to, right? He's the reference, obviously. He's none other than the CEO of the largest bank of the world. So let's say that Jamie Dimon is right, and the S&P can still fall another 20%. So what are we talking about here? Let me see. Another 20% drop, guys. In the case of the SPY or the S&P, we'll take the SPY down to $289, guys. Oh my God. Yeah, you heard correctly, guys. $290. Oh my God. This could be something in the vicinity of 2,900 in the S&P 500. I am bearish. You guys know that I am not optimistic about the markets by any stretch of the imagination, but I don't see the S&P 500 paying a visit down to 2,900. That's very extreme. Very, but very extreme. So if tomorrow we happen to go lower, watch out for $354, guys. In the case of the SPY, very, very ugly looking sharp clear downtrend below all the moving averages. We can see a decline in 200-day moving average, decline in 100-day moving average. So the bulls are very far away from the 5-day moving average, which would be the most immediate target that they would be aiming at in the upcoming trading sessions at around $370. So unless the bulls take out $370 in the SPY, guys, the sellers are in absolute and total control of this ETF. So the most likely outcome for any rally that we might be seeing is going to be a sell-off. We might be seeing once again a sell the rip kind of situation for the market. Take a look at these guys. Let me pull up here the 1 day 1 minute chart. So check this out. How many attempts to go to the upside we saw today in the case of the SPY? So let me count them for you guys. Take a look at this. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24. 24 attempts to go higher we saw in today's trading session, guys. And every single one of this attempt ended up being sold. So what's the message over here, guys? The sellers are in control. So if you guys are scalping while you see the SPY trading below VWAP and most importantly trading below the 5-day moving average, so scalping over here with a tight stop loss is a high probability trade, guys. The sellers are in absolute and total control of both, obviously, the S&P 500 and the SPY. Very ugly looking short, guys. And obviously, the most important or the main line of defense for the bulls are here is going to be $355. This was the low that was hit back on October 2nd. And if the bulls happen to lose $355, we're going lower, baby. That is what is going to be happening over here. And mind you guys, despite the fact that we can see a very ugly looking chart in the case of the SPY, I am not holding any puts as of now. I am being careful. I have been making very good money with put options that, I don't know, I'm going to be careful and I'm going to try to short the SPY throughout any given trading session rather than swinging or holding puts overnight. By the way, we can take a look at the market structure of the SPY. I have it available here, guys, before I go over some other stocks. So let's see. I guess that obviously, what is this gonna say? Take a look. Take a look. So we have some sort of an improving market structure over here, guys. 4.2 out of 10. And so now we have an ascending demand that actually is above the demand, sorry, which is above the supply, and the supply is kind of decreasing. So this is an encouraging market structure for the SPY that shows us that despite the fact that the RSI, that the relative strength index of the SPY is not very low, we can see the RSI on the 4-hour chart sitting at 36 points. This implies that from a market structure standpoint, there's still hope for the bulls over here. So, Ka- Khadija Mohamed, NVIDIA, let's go over NVIDIA. Absolutely. Let me go over NVDA. Okay, over here. So all of the semiconductors got absolutely killed today, guys. Unbelievable. Unbelievable. So NVIDIA went down today 3.36% and it closed the trading session at $116.70. So I don't know. I don't know what to say, guys. So we have a former support at 114 bucks. Let me pull up here the 3 chart. I think that this is a former support. In the case of NVIDIA, yeah, this is such an important spot for NVIDIA, guys. 114 bucks is a previous support back from March of 2021. And this is also a previous resistance back from August of 2020. So this might be an area from which NVIDIA could be potentially bouncing back up. But mind you, if this support happens to be taken out, we have room down to $96, guys. Wow. Very ugly looking chart. And this area around 114 bucks is going to be very, but very important. So if the trading session opens tomorrow, because take a look at this, guys, the bulls were able to hold 114 bucks a day as support, and they were actually able to close the trading session slightly above PWEB, which happens to be encouraging. So I would be looking at Nvidia tomorrow either bursting above 118 bucks, in which case we have room up to $126 5-day moving average, which obviously has a declining position, or maybe if Nvidia opens the trading session and pays a visit down to 114 bucks, and if a good support happens to be found at that level, it could be bouncing back up, and maybe it could be filling the gap up to $118. So these would be two possible scenarios for tomorrow's trading session. But take a look at this chart, guys. This is a very ugly looking chart. You have to be very careful, unless maybe you want to add shares for the very, 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 very long term. I don't know. Maybe if you guys are thinking about 8 or 10 years out, be careful. The stock of this company can easily go lower. Clear, we are dealing, or Nvidia is dealing with a primary downtrend below all the moving averages. We can see the 200-day moving average in a declining position, as well as the 100-day moving average. We also have over here a death cross, 50 SMA crossing below the 180 SMA. The 4-hour chart, a declining 5-day moving average. We can make the case that the RSI is a bit low. Definitely, if this support of 114 bucks happens to be taken out, NVIDIA has an appointment with lower prices. Let me see what the market structure of NVIDIA is looking like. Let me put it up over here. Let me see. Okay, NVIDIA. And we have an encouraging market structure. So as you guys can see over here, the blue shaded area represents the demand for the shares of NVIDIA. So we have a fall in demand and an ascending demand and a fall in supply. So this is an encouraging or hopeful market structure for the bulls that could imply that this support at around 114 bucks might be respected in the upcoming trading sessions. But be careful, very but very ugly looking chart over here. Hello, can Triple Q go before the CPI report? I don't have the crystal ball. And Noha Mohammed. I don't know, but take a look. You guys should know that the Triple Q basically tracks the Nasdaq 100. And take a look at today's close, guys. Let me show you the NDX. So the Nasdaq 100 closed today's trading session below 11,000 points. You guys know that the fat numbers are very important. And take a look at this, guys. Let me pull up here a 3-year chart. So today we closed below a previous support for the NDX back from August of 2020. Unbelievable, guys. Unbelievable. September of 2020. So the very last time that the NDX hit this area, this level, below 11,000 points, we were in September of 2020. Unbelievable. So a very ugly looking chart as well for the NDX. And the same situation should apply for the triple Q. Let me pull up here the triple Q. Yeah, the same situation, guys. In the case of the triple Q, We closed today at a level that we haven't seen since September of 2020, and the triple Q closed below the June low, below the low that was hit a week and a half ago. Uh, this is a very, very discouraging chart to say the least. So, how lower could the triple Q go? In the case that we see another sell-off in the markets, $258 maybe. Yeah, this could be a potential support for the triple Q, depending on obviously whatever the CPI report shows on Wednesday. Remember, we so the only inconvenient for the bulls as of now is the CPI report, guys. We have the producer price index, we have the Fed minutes, we have a new earnings season that is kicking off on Friday. So we have a bunch of concerns on the table when it comes to the tech sector and the triple Q for that matter. So very, very ugly close for the triple Q, no doubt about it. Mars colonist one. Is it not more likely that we will fall more since we received good economic numbers last week? Jay Powell will definitely be hawkish aggressive with this next meeting. Yeah, the next meeting of the Fed is taking place on November 2nd. And yes, we got bad news when it comes to the jobs report of September. Bad news. So the jobs report that came out on Friday shows that the economy isn't slowing at all. And most importantly, the average hourly earnings came out as expected, 0.3%, reflecting an increase of 0.3% month over month. So the economy isn't slowing at all. And yes, I think that the Fed has a bunch of reasons to keep on sounding hawkish, unless we happen to have a positive CPI data report for the bulls, which I don't think is going to be the case, but we cannot rule it out either, obviously. Short for the snow, Dana Comstock, absolutely. EV sector thoughts. I am bullish. Guys, you know that I am a long term investor in Tesla. I am very bullish in the EV sector, but you need to understand that the situation that we are dealing with as of now is an economic environment in which interest rates are going higher, and we don't know until what point the Federal Reserve is going to hike interest rates. So the higher the rates go, the deeper the multiple compression is going to get. And every single one of the EV stocks that we have available as of now in the markets are higher multiple stocks. So anyone that is investing in either Tesla or Rivian or Lucid or you name it, whatever uh, EV related stock you can tell me, all of those stocks are expensive stocks from a multiple perspective. So, in an environment, guys, in which the only thing that we know is that inflation is getting out of control and that the Fed is going to remain hiking interest rates, so all of these stocks can go lower because we don't really know when the let's say multiple compression process that we are seeing as of now is going to stop. When is that process going to stop? Whenever the Federal Reserve either pauses the hikes or drops interest rates or decreases interest rates. So until then, every single electric vehicle related stock that you can think about, ChargePoint and Rivian and Lucid and Tesla and I don't know, EVgo, all of those stocks still have room to the downside simply because of the fact that those are expensive stocks from a multiple standpoint. So they still have more room to the downside, no doubt about it. So be careful if you guys are trading those kind of stocks. If you want to invest at a long term, this might not be the best moment to buy stocks unless you're 100% sure that you have the stomach to deal with volatility. Because yes, if you tell me, as of now, guys, in the case of Tesla, we were talking about Tesla. If you tell me, okay, Alvaro, you know what? I want Tesla. I would like to start a position over here thinking about 10 years out. Okay, go ahead. I think that Tesla is very likely to be way higher than the current price that this stock is showing us as of now, 10 years out. But if you are going to purchase shares for the long term with these horrible technical charts, you have to be willing to deal with a lot of volatility. And you need to put money on the table that you don't need in the short term because all of these stocks can definitely go lower. So that is something that you need to keep in mind. So Netflix, that's a stock that I was taking a look at today. Let me go ahead and take a look at Netflix. Drew Bider, what's up, bro? You're always here. And my live streams. Okay. Live streamings. Okay. Netflix goes up today. That's good. This is a sign of relative strength. So Netflix goes up today 2.33%, and it closed the trading session at $229.98. So $230, guys, is such an important spot for Netflix. And why? Well, because at $230, the bulls failed on multiple occasions back in July. So the bulls are trying to burst above a former area of resistance in which they failed many times before. So this is going to be very critical. On top of that, $230 happens to coincide with the 180 SMA on the 4-hour chart and also with the 5-day moving average. So this is a very, but very important spot. If the bulls happen to take out $230 on good volume and momentum, then we can make the case that they might be potentially being able to fill the next important gap up to 220, 52 bucks, which is a spot at which they have failed on 1, 2, 3, 4, and 5 occasions. So this would be the bullish scenario. However, if the markets happen to go lower and if the bulls of Netflix fail at bursting above the 130 bucks, guys, this would easily be a short down to the 100-day moving average at $210. So this is not a good looking short. We have we can clearly see over here a declining 200-day moving average. Not a good looking short by any stretch of the imagination. But obviously, guys, if we compare Netflix uh, relative to Tesla and Microsoft and Google and so many stocks out there that are near 52-week lows or below their former 52-week lows, then we can make the case that Netflix is showing some sort of relative strength. I would not even say relative strength, but Netflix is showing that there is some love out there for the stock of this company. The RSI is sitting at 45 points, so Netflix is neither oversold nor overbought. It could be going either way. Let me take a look at the market structure of Netflix. Let me see what is going on over here with NFLX. What is the market structure saying? And this is a unacceptable market structure. 7 out of 10. The market structure sentiment, and we have a rise in demand that is above the supply. So maybe if we happen to have a turnaround Tuesday, tomorrow, who knows? If you guys see Netflix taking out $230 with the indices going higher, this could be a trade. This could very well be a momentum trade up to $251 per share over here for Netflix. Chart for Snow. Yeah, let's go ahead. I haven't taken a look at Snowflake, guys, in quite a long time. Let me see what is going on in the case of a Snowflake. Hmm. Excuse me, guys. So Snow went down today 9%, and it closed the trading session at $159. So the bulls are holding it. Are trying to hold here this 100-day moving average. This is a very important moving average, guys. So Snowflake is hanging on by a thread at around $156. This is an easy one, guys. If the bulls lose this 100 DMA, we have room to either we have room to the downside to either $146 or maybe $131. This stock is going to be um, on my list of possible shorts for tomorrow's trading session, guys. If we happen to see the NDX and the S&P 500 taking a hit once again, and if a Snowflake breaks this support at $156, this could be a short, no doubt about it. However, we can see the RSI a bit low on the 4-hour chart, sitting at 27 points. And I am going to, let me see, I'm going to draw a line over here. We have a former resistance, guys, that could start to act as a new support at around $159, precisely the price that a Snowflake closed the trading session at today. So if the bulls start to consolidate slightly above $158, 159 bucks, which happens to be a former resistance back from late July and also back from early May, this could be a sign that the bulls are gathering momentum in order to make a push higher to try to fill the next gap, the next important gap up to $175, which happens to be a previous resistance back from, this is back from early August. So over here, I just told you guys both scenarios. If this 100 DMAs is taken out, is broken to the downside puts, but if the bulls start to consolidate slightly above 150 bucks, $158, then we have room up to $175. And be careful as well. Take a look. We can clearly see over here a decline in 200-day moving average. So this implies that the sellers are in absolute control of this technical chart, and the Snowflake is also below the 5-day moving average. Not a good looking chart, but we could take a trade on Snowflake if we happen to place a very tight stop loss. I appreciate it. Absolutely, Dana. Anytime. ENPHASE, Curie Mariano. Let me go ahead and take a look at ENPHASE then. Okay, let me see. There you go. So goes up today 1.19%, and it closed the trading session at $258.18. Take a look at how the bulls defended tooth and nail this 100-day moving average. This is an encouraging sign, but we saw a massive profit taking when it comes to solar stocks, and obviously ENPHASE wasn't going to be the exception to the rule. So ENPHASE closed at $258. We have a next cap, guys, up to $263. And I got to be very honest with you, this is a very risky trade because the bulls lost a very important support at around $270. So the only way, guys, that I would be touching, I have two possible options in order to touch ENPHASE, guys. One would be another visit down to the 100-day moving average at around $244. If I happen to confirm support over there, I could be going long on ENPHASE, or another possible spot. This is a very volatile stock that when trades and good volume and momentum can go higher in a very aggressive way. So if the bulls can take out this 100-day moving average at around $264, I think that we might see another push to the upside up to $270, which was the very important support that was recently lost. 271 bucks is a previous support back from late September, also back from late August, and lastly, back from early August. So these are the two possible scenarios that I am seeing in the case of ENPHASE. Support at around $244, or maybe a breakout to the upside um, from $264. The RSI is sitting at 40 points. Very healthy from a technical standpoint, and faces neither oversold nor overbought. So the stock of this company could be going either way. Let me take a look at the market structure of ENPHASE. What a beast of a stock, but since that support of $270 was lost, guys, we have to be very careful because the sellers showed up, and the market structure sentiment acceptable 3.4 out of 10, and we have as of now an ascending demand that is above the supply. So this is the reason why the bulls were able to find support near the 100-day moving average. So there you go. We also went over ENPHASE. Mars Colonies 1. Are inverse stocks a good buy to hold? No, 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 no. Heads market? No, no, no. I have a few fractional shares of SQQQ and UBXY. No, bro. Please, guys. I'm begging you. So take a look at this. You have SQQQ. Okay, FQQQ. Okay, SPXS. These are leveraged ETFs. So they decay over time. If you go ahead and take a look at the prospectus of all of these leveraged ETFs, These products were designed for day trading and overnight trading. These aren't vehicles to invest at a long term. And why are you going to be holding for longer than 2 days a product that you know for sure is decaying over time? Doesn't make any sense. Okay. So I have lost money with these kind of leverage ETF. So don't lose money, guys. I already did it. So please take my advice. If you're going to take a trade with SPXS or SQQQ or any other leverage ETF, please uh, make sure that it is going to be either a day trade or a an overnight trading worst case scenario, but do not hold these kind of ETFs for longer than 2 days because they decay over time. So the longer you hold these leverage ETFs, the more likely that you're going to be to lose money on them. So be careful with that, okay? What's up, Giovanni? Anytime, guys. I am here to help. I think that we are already 40 minutes in, and that implies that I am going to wrap it up. Yeah, 40 minutes, guys. Remember that I am going to be live streaming for you guys once again on Thursday. And Mario is going to be joining me, and that is going to be a crazy live streaming, guys, because that day the CPI report is going to come out. Be careful. We are dealing with a very challenging market or with very challenging markets. So be careful out there. Okay, manage your risk. And that's it, guys. Thank you very much for joining me. And see you guys on Thursday. And obviously, you guys know that I am always available throughout the trading sessions on Discord. So thanks a lot, guys, and enjoy the rest of your day. It was very nice to hang out with you today once again. Okay. Bye, Patricia. Bye, Ura. Bye, Giovanni, Mers, Colonist, Parvis, Dana, Comstock, Fury Mariano, Drew Ryder, Sharon, Bruno Godinez, Noah Mohamed, Isaac. So take care, guys. Enjoy the rest of your day.